And what about the impact of the lack of production with regards to delivering on the contracts, the existing contracts that they have?
Yeah, it was an interesting one because there's been a lot of speculation amongst analysts and even retail investors that they'll seek to push their delivery profile around. They might call for force majeure, etc. What came through really clearly was the only possible risk to deliveries might be on the timing. And then in question time, Grant Isaac came back and specified that, hey, it won't be Cameco asking for delivery times to be moved around. Maybe some of their customers will, but it seems that they're getting a very strong sense from their customers that they need these pounds and they want these pounds, and Cameco's ready to deliver on those according to the original timeframes. So no indication whatsoever that they'll be wriggling out. They talked a little bit about some of the mitigation measures that they might have if they really get backed into a corner on spot price, and the capacity to borrow off customers who've got storage with them. That's probably the most significant of that, but also talking about their own inventory, which suggested to me that perhaps they're thinking, well, let's just leave that inventory as the final mitigation in case we really see a rocketing spot price and we don't want to chase it through, X plus Y. That's when the inventory will come into play.
So a bit of strategy here. Well, I thought it was a bit of strategy from there. So Grant, again, was talking about it was their decision. I think this control component came through a lot throughout the language of the whole call. But it was their decision to shut down at MacArthur Lake. It was their decision to shut down Cigar Lake and draw from inventory in the marketplace. It's almost like they wanted to suck out these floating inventories from the market to help the market drive the price. This was their contribution towards driving price, because, as you say, there's a lot of sort of unknown and unwanted and inventory out there. There's off book and on book buying. It's been a very hard space to judge, but this seemed like a deliberate decision by them to get back in control with regards to the price at which they could sell their own production, but they needed to kind of clear the table first. What was your take on that?
Yeah, I agree with you. And there was 2, maybe even 3 points where they talked through their mitigation measures and they finished the statement with, but that will lead to further destocking. So clearly their strategy is they don't really mind how it happens, but they're playing let's call it a 1 or maybe a 2 or a 3 year game here, where they want to see destocking out of this industry, no matter how it happens or where it comes from.
Yeah. So, and just for people who are new, because again, we're getting all sorts of people watching the show now, perhaps people have not been in the uranium space for the last 2, 3, 4 years. The price at which, the spot price at the moment is, hitting the heights of 34, it was at 23 2 months ago. But if you're a producer with your pounds in the ground, you want to sell them for the most amount possible. If you can go into the market, buy it somewhere between 23 and 34 and sell against contracts which you may have at much higher prices, because the contracts were agreed, a while ago, whether it be 5, 6, 7 years ago or longer, as we've heard for some companies. You're going to choose to do that rather than eat into which is valuable inventory of your own. So that's the kind of the thinking, I think, that Cameco are going through there. A couple of other phrases which we talked about this last week, which is and kind of relevant to what we just talked about, which is Cameco said it's not about the size of your inventory, it's about the mobility. What did he mean by that?
This sector has always operated off relatively large amounts of inventory compared to other energy sources, and certainly compared to industrial metals, for example. And that's just a feature, that's just what it is. So the point that was being made is there is volumes of inventory, and that's just how it's been for decades. The relevant question is not really how much inventory is there and how does that compare to 10 years ago or 20 years ago. The relevant question is how mobile is that inventory? What is the capacity of people to use their discretion to sell that inventory into, for example, the spot market simply because they want to liquidate it, or they like the price that they're getting, or they're turning a trade, for example. So that's the concept of mobility. And what we discussed at length, I think it was last week's show, is a comment that Grant Isaac made, which is the mobility of inventory is inversely proportionate to price. In other words, as price goes up, there's less material around, because in this sector, people sell, generally speaking, most of the inventory that's sold is sold not really to make immediate returns or because it's traders operating on principal positions and that sort of thing. In the past, it's been sold because the people who are holding that inventory don't really feel that they need it right at that moment, and they can buy it back in the future. So the moment you've got a rising market, they rethink the idea of letting that out into the market, because they think, well, gee, I might have to buy it back at $10 a pound more, not too far from now. So that was the concept, and it came through in the context of him confirming that they've seen sellers retreating in the last few weeks. And I think Tim Gitzel said that Grant had been neck deep in the spot market. So clearly they've been quite active, and that had been the case. Whereas last year in 2019, in as many words, they said, well, look, we were almost the only demand in the spot market in 2019, and most of the material coming at us wasn't inventory, mobile inventory, but rather these producers who were selling uncommitted production.
Couple of points there is, what do you think is going to happen to traders? How are they going to be affected in this environment?
So we're already seeing that they're being negatively affected by two things. And for viewers, the main bread and butter that traders have been doing over the last several years has been the carry trade. And that's been a function of there being too much material. It's been an oversupplied market. And they've played what's been quite an effective role in this market to take loose pounds off the spot market, finance them, sell them forward for delivery in, say, 3 years' time, where the utility locks in a price now, which is calculated as whatever the trader can pick up those pounds for today in the spot market, plus their cost of financing, plus their cost of storage, plus whatever margin they feel that they need to make it worthwhile. So that's been good money for the traders. And as long as they've got strong counterparties and they've got customers who are good for it in 3 years' time, they're not wearing any real risk there, and they're just gluing pieces together and making a nice little margin on the turn. Now, what's happened very recently is, first of all, they've lost a lot of access to those financing facilities. So it's much harder to finance competitively those carry trades. And that's been a function of the sort of pandemic-induced financial crisis at a broader level. But also what's happened is the material just isn't available in the spot market. So they can't go to a utility and say, hey, do you want 300,000 pounds in 2 years' time? Because they can't get 300,000 pounds this week without seriously moving the market. So that's where the traders are losing out. And you referred to the interview that was given by Mr. Permitov from Kazatomprom, and he made some very interesting comments in that traders are going to have to reinvent themselves. They no longer have this little gravy train of the carry trade as the market tightens up. And those comments were directly endorsed by Cameco on this call. So they're obviously thinking in the same way.
Well, let's get on to that, Mr. Permitov. Okay, so he in part talked about the way that different mines were impacted in different ways, which therefore would in fact impact different partners in different ways, because it's they do partner up, Cameco being one of them. So it's a question of what that relationship is and what percentage of that JV, how it's apportioned. So what's your take on that call, quite frankly, because he again seemed quite conservative and considered in his approach to this too.
I'm not sure where he was going in terms of if there was any agenda in the way that he was answering that question. I think it was just a well-posed question that he was putting out there. So Mr. Permatov explained that in situ recovery mines, when you slow them down, basically what you do is you continue pumping the pregnant acid back out of the ISR project. And so initially you can stop new development at these mines and continue to get your recoveries. But what they can't do in Kazakhstan at the moment is they can't do what's called wellhead development. And with these mines, you need to constantly be putting in your injection wells and building up your extraction wells so that once you finish this little pen, you can move to that one, then you can move to that one, then you can move to that one. That's what they can't do. And he was making the point that the better quality assets there that are bigger, that have got their configuration much larger, they've got a longer runway that they can survive at before they run out of permeability and they run out of extraction and therefore they run out of product. But to your point, he made the point that it does affect their partners in very distinct and different ways. And the fact that everyone's down, there will be a ranking of impacts. But again, if those mines in Kazakhstan, if the wellhead development is suspended beyond the initial 3 months, it will start leveling everybody out, because even those who've got access to the best quality joint ventures will lose their production and a large proportion of their production as well.